text retyped without the loading lines. Introduction to Taxation. Reading Quiz 2. Why are we studying tax? Most importantly, it's on the CPA exam. Why are we studying tax? Why are we studying tax? After taking this class, you graduate and decide to start saving for retirement. You don't know a lot about the investing world, but gathered from your studies that you should probably put your money in a stock market index fund, such as the Vanguard Total Stock Market Index VTSMX, so that you will earn the average stock market return on your investments. In your tax class, you learned that you could put $6,000 per year into a Roth IRA and that any earnings on your investments would not be taxed. Suppose you put the maximum $6,000 at the end of each year into a Roth IRA for 40 years and that the average market return over that time is 7%. How much money will you have to retire if you save nothing else? Why are we studying tax? After taking this class, you graduate and decide to start saving for retirement. You don't know a lot about the investing world, but gathered from your studies that you should probably put your money in a stock market index fund, such as the Vanguard Total Stock Market Index VTSMX, so that you will earn the average stock market return on your investments. In your tax class, you learned that you could put $6,000 per year into a Roth IRA and that any earnings on your investments would not be taxed. Suppose you put the maximum $6,000 at the end of each year into a Roth IRA for 40 years and that the average market return over that time is 7%. How much money will you have to retire if you save nothing else? PMT equals 6,000, N equals 40, I equals 7%, PV equals 0. Solve for FV equal $1,197,811. 6. Why are we studying tax? Your college friend Jane studied finance, but thought accounting and tax classes were a waste of her time, so she quickly forgot everything she learned in them. She was sure that she would one day be an excellent stock picker, so tax knowledge wouldn't matter to her. She graduates at the same time as you, and also saves $6,000 per year for retirement in a regular brokerage account. She didn't learn about or care about the stuff in her classes about Roth IRAs. Jane frequently buys and sells stocks and faces a federal tax rate of 22% and a state tax rate of 8% paid each year on her investment gains. Jane eventually learns that beating the market over long periods of time is harder than it sounds, and she also averages a 7% before tax return over the same 40-year period. How much money will Jane have to retire? 7. Why are we studying tax? Your college friend Jane studied finance, but thought accounting and tax classes were a waste of her time, so she quickly forgot everything she learned in them. She was sure that she would one day be an excellent stock picker, so tax knowledge wouldn't matter to her. She graduates at the same time as you, and also saves $6,000 per year for retirement in a regular brokerage account. She didn't learn about or care about the stuff in her classes about Roth IRAs. Jane frequently buys and sells stocks and faces a federal tax rate of Sure, here's the text retyped starting from slide 8 onward. 8. The purpose of taxes. Any tax system serves two primary functions. 1. Raising revenue for government functions and services, to encourage or discourage certain behaviors by providing economic incentives or disincentives to engage in that behavior. E.g., to encourage people to save more money. There are several provisions in the tax code that allow people to save money in tax-favored accounts, such as 401ks, IRAs, HSAs, and 529 plans. To discourage illegal behavior, bribes and fines are not deductible. 9. How do tax laws shape the world? And how does the world shape tax laws? Policy goal: wean the country off fossil fuels. Electric vehicle credits. Before tax cost of Tesla Model 3 is $42,490. After tax cost is $34,990. Almost 20% cheaper, brings the cost below $35, technically, allowing it to compete with the most commonly sold cars. How do tax laws shape the world? And how does the world shape tax laws? Policy goal: encourage home ownership. Mortgage interest deduction. For a single taxpayer with a $250,000 mortgage and $100,000 in annual income, monthly mortgage payment. Without the deduction, $1,600. After the deduction, $1,1300. How do tax laws shape the world, and how does the world shape tax laws? Policy goal, redistribute wealth. Gift estate tax, reduces ability of rich people to shift income, reduces generational wealth. Estate tax rate is 40% for estates above 1 million, so a $100 million estate could owe over $39 million in taxes. Calculating taxes. The amount of tax owed for any kind of tax is tax base, tax rate. The tax base is the thing on which the tax is calculated, e.g., income earned, sales price of a good, gallons of gas, property value, etc. The tax rate is the rate of tax on that base, often expressed as a percentage when the base is a dollar amount, e.g., the corporate income tax rate is 21% of taxable income, or a fixed amount when the base is in units, e.g., 20 cents per gallon of gas or $1 per pack of cigarettes. 13. What's the tax base? Progressive, regressive, or proportional? Car registration. U.S. tax. Property tax, ad valorem tax, gas tax, excise tax, federal income tax, self-employment tax. 14. Tax rate terminology. Tax rates can have various structures. A progressive tax rate increases as the base increases, e.g., the first $50,000 of income is taxed at 10%, and amounts above that are taxed at 20%. A proportional tax rate is the same no matter the level of the tax base, e.g., the state sales tax rate in Oklahoma is 4.5%, no matter how large or small the purchase is. A regressive tax rate decreases as the base increases, e.g., Social Security tax is 6.2% of an employee's salary up to $142,800 in 2021 and drops to 0% on income above that amount. 15. More tax rate terminology. We also talk about different tax rates to evaluate the incidence of taxation and to aid in decision making. Average tax rate, taxes paid, tax base. Marginal tax rate, the amount of tax paid per incremental dollar of income or other tax base. Effective tax rate, taxes paid total economic income. Note that total or economic income is usually not the same as taxable income because some income is not taxable and some expenses are not deductible. The average tax rate only includes taxable income in its calculation, whereas effective tax rates include all economic income. The average tax rate is only really useful for assessing the degree to which a tax system is progressive or regressive. It tells us nothing about how tax burdens are distributed. E.g., suppose an individual earns $120,000, but is able to reduce taxable income to $80,000 through various provisions of the tax law. If the tax rate is a flat 30% on all income, the average tax rate would be 30%, $24,000 around $80,000. But the effective tax rate would be only 20%, $24,120. The marginal tax rate at any level of taxable income in this example would also be 30%. 16. Incidence of taxation. Incidence of taxation refers to how the economic burden of a tax is distributed among economic agents. E.g., suppose a worker earns $100,000 in California and pays state income tax at a 10% rate. Also, suppose that the employee would be willing to do the same job in neighboring Nevada for $90,000, because Nevada has no state income tax. The employer could pay $10,000 less to have the same job done in Nevada. Given this set of circumstances, the employer bears the incidence of this income tax even though the employee is the one ultimately responsible for filing a California income tax return and paying the tax. On the other hand, if the employee would require $96,000 to do the same job in Nevada because she prefers living in California over Nevada, the incidence of the tax is now shared between the employee and the employer. Incidence of taxation. Who bears the incidence of a tax often depends on the nature of the tax and how elastic the demand is for the item being taxed. If the demand for cigarettes is pretty inelastic, i.e. insensitive to price changes, then smokers bear most of the economic burden for this tax, because higher prices do not cause them to cut consumption very much. If demand for cigarettes is elastic, the cigarette manufacturers will bear most or all of the burden of the tax through lost sales and profits. To take the example one step further, if the cigarette manufacturers were to cut wages or jobs because of the lost income from lower sales, the affected workers bear at least some of the incidence of these taxes. If the manufacturers simply have lower profits and do not attempt to pass on the tax to workers, then shareholders and possibly lenders bear the incidence of the tax. Ultimately, individuals bear the incidence of all taxes, but the individuals who bear the incidence of the tax are often not the ones who directly pay the tax. The difficulty in knowing who will ultimately bear the incidence of any tax is one of several factors that complicate policymaking decisions about taxes. 18. Income tax planning. Reducing taxes legally is often referred to as tax planning or tax avoidance. Judge Learned Hand. Anyone may so arrange his affairs that his taxes shall be as low as possible. He is not bound to choose that pattern which will best pay the treasury. There is not even a patriotic duty to increase one's taxes. Over and over again, courts have said that there is nothing sinister in so arranging one's affairs as to keep taxes as low as possible. Everybody does so, rich or poor, and all do right, for nobody owes any public duty to pay more than the law demands. Taxes are enforced exactions, not voluntary contributions. To demand more in the name of morals is mere cant. Fraudulently failing to pay taxes owed is referred to as tax evasion and can land a person in jail, in addition to owing additional interest and penalties on the amount not paid. 19. Evaluating tax systems. Tax policy is a very frequent source of disagreement. Regardless of political views, the following criteria can help evaluate alternative tax systems. A good tax system is 1. Sufficient. If the primary purpose of levying taxes is to provide government services, the revenue raised should be sufficient to pay for those services. 2. Equitable. Taxpayers in similar situations should pay a similar amount of taxes, horizontal equity, and taxpayers with greater ability to pay should pay more, vertical equity. How much more is obviously a source of major disagreement. 3. Certain. Taxpayers should be able to determine with certainty how much they owe and how the tax must be paid. 4. Convenient. The collection of taxes should not impose undue burdens or be excessively costly to either the taxpayer or the government. 5. Efficient. Taxes cause economic distortions. A good tax system seeks to minimize these distortions. Do you want me to also